like the International Monetary Fund knows now that they've made big mistakes in printing all this money, but now they're suffering the unintended consequences of that and trying to find their way through it now.
Biggs and Boggs.
Hey guys, welcome back to your future hand with Biggs and Boggs. Hey guys, welcome back to your future hand with Biggs and Boggs. Hey guys, welcome back to your future hand with Biggs and Boggs. Okay, fuck, I got it.
Yeah.
Jim Carrey and NFTs, what? Hey guys, and welcome back to your future hand with Biggs and Boggs. I'm Marty Boggs.
And I'm Julian Biggs.
And we got Spencer on sound and screen. Spencer. Thanks for joining us today, folks. We got a real good show for you today. So make sure you smash that like button, subscribe if you're new, and do the things. Yeah, let's get right into it. What are we up to today, and how can we plan for tomorrow? Julian.
Yeah, thanks, Marty. Good to be back in the studio. Today we are going to talk about the monetary expansion policy. These things generally coming in a 10-year cycle, and we are possibly nearing the end of that and moving towards a deflationary, recessionary period. And we're going to talk about that.
Maybe why.
Maybe
things to look out for.
Have a little conversation. But first, as always, we're going to get into it with a little bit of a market scope.
Markets go.
That's great. Okay, so yeah, looking at the Bitcoin versus US dollar chart on the daily time frame again. So zoomed out a bit here so we can see just how far we've come in such a short time. But we'll get zoomed in here, still on the daily, so just underneath this line. If you caught the last update, thank you very much. We appreciate the support. And I did talk about getting a little bit lower, and as you can see, we got down to a total low of $38,900, I think, before springing back up to our resistance line. Now this ascending support line we had is now become resistance. And we're trying to get above that again. So we had a lot of volume trading today, but things kind of dumped. I believe that we're going to close today and the week around the place we did on Friday's stock market close, which is the bottom of 39K. Time of filming this video, $39,541. So things we're watching out for, but right now it does look really bearish. You can see the EMAs have crossed negative, and even if we go to the weekly here, the 20-period EMA is about to cross through the 50, and this is generally not a good sign. So the weekly is looking like we could see a low again around $38,000. But we will keep you updated, keep you posted. Yeah, for now, we are just hanging on.
We're dollar cost averaging.
We're hanging on.
Doing our thing. Remember, so basically that's what we're going to talk about today is accumulation phase is about what we're headed for. So is it time to maybe sell some assets? I don't know about that, because I don't know how much lower we may go. I think more of a sideways, really slow. Maybe it might go down over the next couple years, but it's going to be slow.
Yeah.
I don't know about any drastic drops. Anything could happen, I guess, but
anything can happen. I still personally think we're going to see some more highs. I don't know if we're going to see an all-time high this year, but I think we still, if they're talking about this deflationary, recessionary period for 2023, then we still have a chance at seeing some more highs this year. There's obviously money to be made, so seeing 48K again or 53K, I don't think is off the table over the next, maybe a fefew months before the summertime, by end of May, hopefully, I'm kind of figuring. But, lower price targets are on the table as well. But, the interest rates for debt have not gone up yet. The inflation numbers for March were still at all-time highs, and that's not really slowing down at any time. So they know now, like the International Monetary Fund knows now that they've made big mistakes in printing all this money, but now they're suffering the unintended consequences of that and trying to find their way through it now. And they can't just stop out of nowhere printing the money and stop the inflation, because we are in this turbulent point where they have no choice but to carry on for the foreseeable future, right? So,
doesn't it seem like every day is like a tipping point?
Yeah.
For the last 2 years, every single day has been we're at the tipping point.
And it's funny because they want you to feel like that too. If you're always uncertain of what's going to happen, then they can take advantage of the market easy. Yeah. Right? If they can control our psychology with what's going on in the media and the narrative, war and recession or, all these things. If we're always unsure, we
there's
never know.
There's going to be a shortage. Spend.
Exactly.
There's a recession coming. Save.
Yeah. We don't. Yeah, exactly. So we don't know where to put our money. But if we just focus on that dollar cost average, like you said.
That's the key. Dollar cost average. It's the key.
But yeah, uncertainty will cause that.
try not to get distracted too much by all that sort of stuff. Long story short is it's always been going up. Let's just bring up the S&P for a second there and put it on the weekly and look like zoom out big time.
Yeah. So here's we should have looked at that actually. So here's the weekly, but you can see we're kind of
zoom way out though. I want to see like 10 years. If you can.
There's 10 years right there.
So look, there's been those periods where it goes sideways. Can you see 20 years?
Yeah, probably.
But just look.
So there goes back. Here's 1994.
If we continue to stay on, some sort of fiat standard, that's what's going to happen to any asset. Yeah. So if you're buying assets, whether it's Bitcoin or your stocks,
and all of this is caused by inflation, and this is when it really actually got stupid, was the end of the 90s, right? So here's what inflation causes in assets, and we see these cool off periods, and then we see the end of a 10-year cycle. So from 2000 to 2009, the stock market didn't really do much for anybody. You can see it didn't really get to that all-time high. But now we've had the next 10-year cycle, and we've hit these massive all-time highs, which is why people think we're going to...
So we're likely to see something like that. If we continue on this always on the edge, kick the can as far as we can, game that we've been playing, then we'll probably do some sort of a slow dip overall over the next 5 to 10 years or whatever. Might not be a lot of money to be made in assets that because everything's been so overheated lately, and we basically pushed the last 2 years, we've squeezed the last bit out of the toothpaste tube. When you get down to that last bit and you got it all folded over and you're trying to bend it, you're like, get there! Well, I just want to brush my teeth one more time.
Well, it's expanded so much, the bubble is just bound to pop.
Exactly. Right? But not necessarily pop, but it's just going to cool off. It's just it doesn't work like that. So unless we are going to completely change, because at some point, obviously, this is not sustainable. Mm-hmm. Forcing people to have a job to move the planet and the economy along is way overdone. Obviously, we're just creating and digging holes. Every single thing is creating new problems. Everything we're doing, overproducing, we're doing way too many things because people are forced to have a job and have an income and pay these bills. Mm-hmm. But really, if we would just slow down a bit in general and give everybody a solid income that they can live one household off of or whatever, and things are affordable and things, then that's when you can, we've done enough.
Well, if the conspiracy theorists are right, then we're going to all have a universal basic income soon, right?
Yeah, well, I mean, the universal income, as much as it could be, I don't know, whatever you want to think it is, you should just do whatever works. People should be treated fairly. Everybody should have, if you work hard, I guess there's some sort of credit system or whatever they're going to try and figure out. I mean, I'm not the guy. I don't want to be the guy in charge of it.
No. But the system right now isn't built for the people. It's not built to benefit the people. Right now, it's built to benefit the people that built it. And everyone's like, "Oh, the system is broken and it's failing." It's like, well, no, it's not. It's working fucking perfectly.
Yeah.
It's working perfectly, and they've profited on real numbers, and that's the whole point of the system. That's why it was built the way it was built. Mm-hmm. But now we've hit a population point where it doesn't work. They can't control it anymore, but they can't stop it either. Mm-hmm. Right? It's just this avalanche effect of all this BS that was intended, but now the impact is what we're dealing with, right? And so we have to change the times, and that's why we see this paradigm shift. But they still want their profits. The government and the corporations are still built the same. They still have to work the same. So the motion isn't going to stop, but how we get there is now changing, right? So
forced consumerism has been the driving force of it, and now people are realizing how many things they don't have to buy. Yeah, and you can but it sucks because when people stop buying, then people lose their jobs because other people aren't spending, and the wheel stops and the wheel slows down. It starts to suck. But if you really just find a way to only live within your means and make within your means, and then you don't have to go to Mexico every week or every year or whatever. People do so many things.
You should be able to do everything that you want to do, though.
You should, but how is that sustainable for? Because I don't know, I was talking to an old guy a little while ago, And he's like, my generation ruined everything. Like, you shouldn't be able to just fly jets across the world 3 or 4 times a day if you want to. Like, that's ridiculous. We send massive planes halfway across the world 3-4 times a day that are half empty or empty.
Yeah.
Just because that's their schedule, right?
Right.
And there's a couple tickets sold, so we're sending this jet.
Airbuses.
Yeah, it's insane. Like, the things that we do is just, we don't need to do that, right?
Well,
we
there's
can get by without it.
A lot of unnecessary things that we do.
So many unnecessary
for
things.
sure. But yeah, I mean, yeah, I guess so. It's like, yeah, you want to go to Mexico, then fucking,
so guess what?
You don't have to work anymore, so build yourself a sailboat and you can just fucking head down the coast.
So guess what the solution is? Yeah, do that, or
hey, you got money now.
Now you can do it all from a 10 by 10 room.
What, in the
with
metaverse?
A screen on your face.
Yeah. Well, yeah, exactly. So what do? We buy up everybody's property and we build a bunch of high rises and we stack as many people as we can in the smallest land plots, but they're built super high so we can fit as many people in there as possible. Mm-hmm. And then we get them all in the metaverse, and then we don't have to worry about all these freaking big cities that are just freaking desolate wastelands now of crime and
people fighting for each other
because they're hungry.
Yeah,
right. And that's the reality is that
not.
Yeah, it's no good. Anyway, but the system was built to benefit them. So how do we who's going to be the catalyst, or what's going to be the catalyst to get them thinking for the people, or what's going to be,
so basically
what's going to flip those tides?
If we don't see a change, your best bet is buy assets.
Yeah.
Because as long as we keep kicking the fiat around, it's just going to go to zero. So your dollar cost averaging into anything that is on its way up in value, sort of digital assets or tangible assets, whatever you prefer. I would suggest both.
Yeah, if you can afford real estate,
of course. If you can afford real estate, you obviously that's the number one. But if you can't, you got to diversify between stocks and crypto and that sort of thing, and just keep building your bag. But don't expect too many.
Bitcoin is it's the easiest. It's the easiest, the safest, and lowest risk to reward ratio is Bitcoin. It's the easiest for anybody at home. Like, I don't invest in the stock market. I watch the stock market, but I don't invest in it.
I mean, I've been watching it for a while now. I haven't invested in it, but I want to. I'm like, it's going to crash. I can't.
It's good to, I guess, like you said, it's good to diversify. But
I don't think it's going
to. If we are coming to the end of a 10-year cycle and we see that these crashes happen every 10 years, you can go back and look at the charts and see that it
recovers.
Does happen.
It recovers.
It does come back. So, we could be nearing this good time to buy, but maybe that big crash that everybody is expecting doesn't come. And we are kind of at these lows, maybe 34K is kind of again.
Because you got to remember, you got to remember because of inflation, it always has the what's it called? The momentum to go up, right? So even if it does lose value and people bring money out of it, it will still always go up as the dollar.
And they put it back in. Anybody who's into these stocks or into Bitcoin, and they pull their profits out, they pull their money out. They wait for those lows. They put the money back in.
Exactly.
And the other thing too is if we do move to a recession or a deflationary period, and the dollar strength comes back, I've said this before too, that people will flood their money back into these assets, because not only will the stocks and everything else go down to lower prices, but crypto and Bitcoin will go down to low prices as well if everything else crashes. But now their dollars are worth more, and they're sitting on a bunch of dollars that they sold, and Bitcoin's now worth, maybe it goes to 20K, or the stock market goes back to 3K, you know what I mean, from where it's at now. These things would just flood in with capital again, right? Because the fiat dollar is failing. We know that it's lost 98% of its purchasing power in the last 80 years.
Nobody wants to hold it.
Nobody wants to hold it, especially people with a lot of value. They're looking for places to put their value. So if they feel a crash coming and they sell, and we do see some lower numbers, right. So you better believe that capital is going to come back.
Exactly.
Right?
So they're basically fixing the hugest fake out of all time right now, getting ready for the biggest stock market crash so that everybody panic sells.
Which is exactly what happened in 2008.
Yeah, right? And then they'll just buy it all back up.
Yeah.
And then skyrocket. Bitcoin's just goes to $1 million because trillions and trillions roll in, and there's regulations, and Saudis just go swing.
That's the thing that people need to understand is that, Bitcoin itself is already so much more valuable than so many other assets in its class. But like a crypto as a whole is a much larger market, and money's going to come into it. So if you think about that, the market cap right now for all of crypto is $1.8 trillion. So we actually went to a low of 1.6. So it's good. We're up up a bit more, but $1.8 trillion. So, and we peaked out at, I think, $3 trillion there last year. So, you know what I mean? Like it's only going to go up. It's not going to stop. So the fact that there's 15,000, there's 19,000 cryptos now. Last time I looked, there was only 15,000. So there's 19,000 cryptos. This thing's only growing, and it's not going to stop. The innovation is not going to stop. It's going to be crazy. So even if we do a 5x or anything like any other asset classes done over, say, 10 years or 20 years, you know what I mean? We get to a $10 trillion market cap from here. Like that's really not that much, right? But I think that I think that Bitcoin can easily get to that value too, right? So I don't know. We are early, regardless of prices coming down right now.
Yeah, clearly in a stage where everybody is trying to figure their shit out. Yeah, like everybody.
There's only 4% of the world. I think only 4% of the population is involved in crypto. 3.9% 2021. So maybe we're at, say we're even at 5% right now. All I'm trying to say is that that's nothing in comparison to what it's going to be in 5 years or 10 years. So we're growing at a rate of 113% a year, and we're already holding a 4% of the population. You know what I mean? So that's 8% next year. That's, you know what I mean? Those numbers are going to grow exponentially, and the number from the $2 trillion market cap that we have right now in crypto is just going to explode, because people are not only going to be investing, more people are going to be developing new games and new cryptos and new things. And it's like those market caps don't have to hit the $30 billion market cap that all of these other cryptos have to hit. It's like they can have $100 million in them, and the crypto market cap itself is still going to go up huge with Bitcoin along the way, right? So
exactly.
Yeah, this is going to be the fastest growing thing that we see, I think, in our time for sure.
It's still early, folks. This is our chance right here. Basically the next 5 to 10 years is the opportunity of your lifetime. Yeah. So, just keep grinding out there and get in, and just cost average your way through the next, half decade or so, and you'll be doing pretty good. Hopefully you're young and you got some time.
But even if you're not, drop a dime.
You're right, know what I'm saying? All right, Biggs and Boggs out. All right,
Biggs and Boggs out.
Peace.
Biggs and Boggs.